How to combine a CCI period 14 and a moving average 20 like a pro. How to combine CCI period 14 and a moving average 20 like a pro. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. And for CCI trading, our website is www.dayprotraders.com. All right. How to combine CCI period 14 and a moving average 20 like a pro. All right. If you are using a trading software, you are likely to see the default setting for the CCI that is set at 14. All right. There is a reason why, most trading software use period 14. But for the explanation of why they use period 14, I will refer traders to the video that we call the justification of the RSI period 14 at Dayprotraders YouTube channel. Okay. So if you want to understand why most trading software use the default setting 14, please watch the video that we title The Justification of the RSI period 14 at Dayprotraders, YouTube channel, I will try to remember to put a link to the justification video that I'm talking about now, So how can one combine the CCI period 14 and the moving average 20, all right? First thing first, the CCI 14 is comparing the price to the moving average 14. If you do not know or you never know about this before, you need to go and subscribe to Dayprotraders.com and watch every video on that website about the CCI. The CCI, the ultimate role of the CCI is to compare, the deviation of a financial instrument, the deviation of the price in relation to a specific moving average. So when we are using CCI 20, we are comparing the deviation of the price to the moving average 20. If you are using CCI period 10, we are comparing the deviation of the price in relation to the moving average 10. So when we are talking about CCI period 14, we are talking about the deviation of the price. We are measuring the deviation of the price in relation to the moving average 14, all right? But we are talking about moving average 20, combine CCI 14 and moving average 20. The reason why most trading software, including TC2000, will set the default setting at 14 is because, all right, if we are analyzing, a substance, all right, or anything else, very often we're talking about the heart of the matter, all right? So the heart of the matter is considered to be equal to 70% of a matter. So you see this green spot here. If I want to, in normal condition, if I want to study this, the characteristic of this green spot, I can focus on 70% of this green spot, which is the core value of the green spot on my chart. All right. So in order to analyze the moving average 20, we can use a proxy that is the moving average 14. But when one multiply 20 by 70%, one will have 14. So 14 represents the core value of the moving average 20. Now, it's a long story. That's why I would like to refer you to the video that I call the justification of the RSI period 14, so you may understand what I'm talking about here. So as we are using the CCI period 14, though we are measuring the deviation of the price in relation to the moving average of 14, which is very important to understand, one can combine the CCI period 14 with the moving average 20. How do we do that? So the zero line of the CCI represent the moving average 14 because we are using CCI 14. If you were using CCI 20, the zero line of the CCI is represented by the moving average 20. It's representing the moving average 20. If we were using the CCI period 8, the zero line of the CCI period 8 is representing the moving average 8. All right? So CCI 14, the zero line, is representing the moving average 14. All right? So we have it here. So when a CCI, so this is very important, there's one condition that we need to have. The price should be in a strong bullish progression or in a strong bearish progression. If you forget this condition and you are applying this method that we are about to discuss, it will not work. It will not work, okay? We need to have a strong bullish progression or a strong bearish progression. This condition, okay, is essential, all right? So when we are talking about a strong bullish progression, traders who understand area wave will think of the third area wave, which is usually the strong bullish progression. Traders who understand area wave will also think, when we are talking about a strong bearish move, we are thinking of the third bearish wave. So the strategy that we are applying now is valid only during a strong bullish progression or a strong bearish progression, or during a third area wave or a third bearish wave, a third bullish wave, during a strong bullish progression or a strong bearish progression. Very, very important. What are we looking for? We are looking for the CCI to go above. So this section here, you see, in fact, this is a third minor wave of another wave. But I don't want to talk about area wave now. Just take it from me. This is a third wave. In fact, it's a third minor wave, okay? So this is a strong bullish progression, all right? See, price almost going vertical, okay? If we have a strong bullish progression and the price, okay, displaying, you can see high lows, high in a strong bullish progression. If the CCI pull back near the zero line, CCI period 14, pull back near the zero line and change the direction. What do I mean by that? So it comes near the zero line, which is the horizontal line that I draw on this chart, and change direction with one candlestick bar on that time frame. So you see something like this, come and go up like this with one candlestick bar. Because I'm on a weekly chart here, you can see if it pull back near the zero line during a strong, see, price, how do we know strong bullish? Price must break resistance, must be breaking resistance. So this resistance kaput, all right, resistance broken, all right, price going up and break resistance is strong bullish progression, yes or no? Now CCI came near the zero line and now it changed direction with one candlestick. So I'm going to place a vertical line here. As always, sometimes trader will learn something for the first time, they will go and apply it, and for the first time it may not work, and they will dump it and look for another thing. That's how traders end up having many systems that they do not use. All right? Now, okay. So, came near the zero line and then change the direction like this, okay? With one candlestick. So here you see pull back the price. If we see the CCI doing that like this, came near the zero line with one candlestick change direction, all right? And the price is near the moving average 20 on my chart. I place the moving average 20 here. Below, I have CCI 20. How do we combine the CCI period 14 and the moving average 20 like a pro? CCI must pull back near the zero line and change the direction with one candlestick during a strong bullish progression or a strong bearish progression. When we see that, we have a bullish trading setup. For new traders, the trading setup is not a signal, it's not an entry. We will now implement a top-down trading method. All right? So here I'm on a weekly chart. I see like this. It turned around with one candlestick. By which candlestick? See here, it pulled back near the zero line, and this candlestick here, this one here, it went up. All right? One can highlight the high because I'm on a weekly chart. I'll be very careful If I'm day trading, I'll highlight the high of that candlestick on my weekly chart, and I will also highlight the median line. If I want to buy near above the high of that candlestick, that where the CCI changes direction. Price must form a new higher high if the bullish momentum is strong. Or I may wait for the price to break above that the high. See here, it break above that high of this candlestick here and retest it here on the dot. Now for a swing trader, that's a bullish trade setup. But in fact, when the CCI pullbacks near the zero line and change direction with one candlestick bar, and the price is near the moving average at 20, we have a bullish trading setup. One must, okay, not one should, not one ought to, one must apply a top-down trading method to trade it. Very simple and very powerful. The opposite is also true if we are in a strong bearish progression, all right, and the CCI pull back near the zero line and change the direction. Okay, where am I drawing here? Here it is. It will rally up to the zero line and change the direction when one can the 3 bar, and the price is near the moving average 20. We have a bearish trading setup. So how do we know that we have a strong bullish progression? The price must break support. But normally, the best strong bullish progression is during the bullish third wave, and the best strong bearish progression is during the bearish third area wave. But here you can see that we are not in the third wave, but the price is breaking support level. That's how we know that the bullish momentum is increasing. As you can see here, the price D below the moving average 20, all right, and was retesting it here. I'm going to place my vertical line at that point in time, okay. We want a CCI, so it's corresponding to this point here, where the CCI was coming near the zero line. This is quite a little bit far. We want it to be a little bit closer. Here, this one was closer. We want it to be closer. And to change direction with one candlestick bar. So we want to see which candlestick bar. So that rally with one candlestick bar down. Can you see it? Try to zoom into it. That this one here. This one, this candlestick here. The dark green one here. That's what we want. Rally up to the zero line and one candlestick bearish. In this case, we will highlight the low of that candlestick because we are the bearish trend. We want the price to display lower lows, lower high. For a swing trader, you can wait. You see, it D below that level. Look, it retested yes or no. Test it, boom, and it came down. Use a top-down trading method. Break below, retest that level of the low of the first candlestick with which the CCI changes direction. That's good for a swing trader. Break below that low and retest it here, boom, down. The point I'm making here is that when the CCI in a downtrend, strong bearish move, rally up to the zero line and change the direction with one candlestick bar, and the price is near the moving average 20, we have a bearish trading setup, not a signal, not an entry. We'll implement a top-down trading method. Very simple and very powerful. The next step now is to use a demo account to test and retest this method. And the most important step is to practice and practice until one owns this method. All right? Why this method, okay, is valid? Is because the moving average 14 represents 70% of the moving average 20, which is in fact the core value of the moving average 20. We are using the moving average 14 as a proxy for the moving average 20, or we are using the moving average 14 as a leading indicator for the moving average 20. Now the CCI 14 is representing the deviation, measuring the deviation of the price in relation to the moving average 14. So when the CCI moves away from there's a deviation from the zero line, it's telling that the price, okay, deviate from the moving average 14. The pullback to the zero line is what we call return to the mean. So there was a deviation, and there is a correction. Prior return to its fair value, in this case returning to the mean, which will return to the moving average 14. Now it's changing direction. So there is a deviation. Now there is a pullback, return to the mean. Now there is a change again. The trend is resuming. This is how one can combine the moving average 14 and the moving average 20, okay, like a pro. As always, this method is highlighting high probability trading setup using the CCI 14 and the moving average 20. The next step is to implement a top-down trading method to trade it. If the signal fails, one will come out. All right? So for new traders, there is no trading method that has a 100% winning rate. If you have a trading method that has 60% winning rate, it's a good trading method. But when one gives to a trader that understands the system or who understands the price or the market, you have a powerful trading tool. The trading tool alone will not trade for you, but you need, okay, an educated trader to use a powerful tool to produce excellent results in the financial market. We recommend to traders to test and to practice until they master this method before going live. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to combine the CCI period 14 and the moving average 20 like a pro. If you have any comment, put in the comment section. If you have any question, put in the comment section, and in due course, we'll record another video to answer your specific question. If you have any suggestion, please put in the comment section. Happy trading to you all, and speak to you soon. We are the TSTW24 traders talking about how to combine CCI period 14 and a moving average 20 like a pro. Speak to you soon.